Hello everyone, welcome to another session on dollar INR. It has been a relatively quiet week for a couple of weeks, and that is how we have seen that the dollar INR has gone slightly sideways here. If you see, I'll just clean it up, slightly sideways here. Okay, small trading ranges what we can see here. So sometimes sideways movement are very good for the markets to take some breath, relax, and all risk managers like us can take time to evaluate and take important decisions. So what do we decide now during such a time when markets is sideways? First, let us look at some important technical indicators, and then we will arrive at some important decisions. Okay, so first thing, if you look at the Bollinger Bands, it has narrowed. Okay, so what is a Bollinger Band? Bollinger Band is a volatility indicator. If volatility is high, then the bands widen, and when volatility is relatively low, it narrows down. Okay, so we see the extreme bands of the Bollinger narrowing down, and that is the reason if you see the bandwidth indicator. Okay, bandwidth indicator is simply the difference between the upper band and the lower band. So the bandwidth indicator is reduced. See, if you would see, this has come down. Okay, bandwidth indicator has reduced. Even if you look at the ATR, the average true range, another volatility indicator, average true range has also come down, and it is gradually coming towards the long term moving average of the ATR, which is the yellow line. Okay, so earlier in January the volatility was very high, so the bands widen, and if you see the bandwidth indicator went higher, ATR also went higher. But in February, in the last 2 to 2.5 weeks, the prices have gone sideways and the bands have converged, so volatility is reduced. Okay, so the theme of today's idea is that the dollar INR volatility has come down. So how do I take a risk management or a hedging decision during such quiet low volatility period? Okay, now a lot of people think that in low volatility situation, just stay calm, don't do anything. But remember, a low volatility today does not mean that it will be low volatility tomorrow or in the future. Okay, markets are dynamic, there are just too many things happening, lot of geopolitical uncertainty, the markets can go anywhere. So better to take a decision during a stable time than get caught in a time when it is very volatile and things get out of hand. Okay, so in current situation when volatility is lower, you should certainly look at doing vanilla options. I've been reiterating about vanilla options for a lot of time. Now is probably a more appropriate time because the volatility is lower, and when you take vanilla option during low volatility time, the option cost is lower. Okay, so a 3-month option, ATM option, where strike price is equal to the forward rate, which is usually used to be around 85 to 90 paisa, will be around 80 paisa now. Okay, and a 2-month ATM option, which usually is 65 to 70 paisa, will be around 57-58 paisa. Okay, so vols has come down, the option premiums will be lower. Okay, so what can dollar importers do? Let me come to dollar importers first, then I'll come to the dollar exporters. So if you look at this 50-day chart, moving average line on this daily chart, this yellow line, we have seen that in history this line is a good support indicator. Okay, multiple places it has acted as good support indicator. What does that mean? That means dollar touches this line, probably remains there for a while and then goes higher. Okay, so it is very close to the 50-day moving average. Okay, so dollar importers can do some forwards and also do some vanilla options. Why forwards? Because it is at a support level, and why options? Because volatility is lower, option premiums will be cheaper. So you need to do a mix of forwards plus options both. So what is for dollar exporters? Now we have seen that the trend very clearly is an uptrend. Okay, let me clean this up. It's a very clear uptrend. Okay, you can see this trend channel. It is a very clear uptrend. We are at the moving average support. We are also at very close to the lower trend line support trend line, upward sloping lower side. Okay, so it's some kind of a support level. So this probably is some kind of a support level. The levels around 90 10 20 to 90 30 40. Okay, so if it is at a support level, obviously the importers should hedge using forwards and also use vanilla options to hedge. Exporters can hold on for a while. Okay, you have seen that rupee has been under pressure. Most likely the pressure will come back. So you can look at a slightly higher spot to capitalize doing forwards. Okay, but if you are mandated to hedge, then since volatility is lower, you can look to do put options as well. Okay, so forwards plus options for importers, dollar importers, and for dollar exporters, predominantly options now. And when rupee weakens and goes higher above 91, 91.50, probably to 92, those levels you can look to do some plain forwards. Okay, so that is it from my side. Have a great evening ahead.